Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the euro currency. So yesterday performance was a bit, well, let's call it as a bit dramatic, but actually for us it was not really surprised, just because market turns down precisely from our target that we have specified yesterday. And if you even haven't have taken the long position yesterday, it was pretty much time to protect your position via break-even stop or even to get some result. As usual, the reversal has happened on external factors. It was data release on the wages in the United States and showing a bit stronger level, which means that Fed could keep its relative hawkish rhetoric. In general, the major consensus right now among the investors suggests that Fed will skip the rate change in November, but at the same time, statement of the Jerome Powell should be hawkish, preparing market that rate will be changed in December. While in the December, when the rate will be raised, the rhetoric should become more dovish. So this is just general view among the investors on a perspective of the Fed. So it means that currently today, if they will be correct, theoretically rhetoric should be more hawkish, which could provide some support to the United States dollar. Additionally, as usual, if we'll take a look at the cross-market analysis on a dollar index, despite this recent upward action, and in fact we have here this sharp reversal, this reversal session, market has formed another bearish grabber. So here market even showing 4 grabbers in a row, and nominally it still suggests that market could drop. So currently this major point has not been taken out yet. Invalidation point of this setup is not destroyed, although currently overall background suggests that dollar should keep rising. So maybe this will happen today or tomorrow if dollar will keep going higher. This situation with the grabbers will be resolved and we will see what will happen correspondingly on the euro currency. At the same time, on the 10-year yield, it's also dollar supportive, because yesterday market, as we said, if you remember yesterday, that this in general combination stands in favor of the more interest rates rising, just because like the consolidation before important level. And yes, the market has formed a bullish reversal candle, bullish reversal session, suggesting that market should try to test this area. Today, besides of the Jerome Powell, today's will be also announced the plans of the Treasury on the borrowing in the nearest time, and it's actually a major question is how the loan amount, the borrowing amount will be distributed between the short-term bonds and long-term bonds, and that could make significant impact on the market. But in general, hardly United States Treasury will cut their appetite for the borrowing, suggesting increasing amount of the borrowing, and that in terms should support our prediction on interest rates, because debt is becoming larger. It means that the supply increasing, which means that yields should go higher. All this stuff together, as you understand, mostly suggests downside action on the euro currency, which is actually increased chances of the downside continuation. But here many things depends on your risk aversion. So if you're ready for some anticipation or taking a position in advance of this possible meeting and pass through all this stuff together, I mean Fed statements, Janet Yellen statement concerning the borrowing and so on, well, you could consider this possible taking the short position probably. If you're not ready, it's better to sit in the hands and see what will happen. The same stands for the bulls, because currently you can see that trend has not broken, and as I have shown you on the dollar index, the grabbers are still valid. That's why, although theoretical, but still we could suggest that it might be the butterfly, right? So if something goes wrong or it will not be as market expects, theoretically we can't exclude that it might be something of this kind. Why not? At least theoretical chances exist that this might happen. And based on the grabbers that have been formed. Correspondingly, the same we could suggest in the downside direction. That's why I said that now most things depend on your risk aversion. So because market kept the break-even point for the bullish and for the bearish scenario valid, so it has not been taken. If price will drop below these lows, bullish scenario will be destroyed. If it will stay above it, it still have the chance to be realized. That's why this point is very important. That in turn means that on hourly chart, for example, here's by the way our XOP that we discussed yesterday, 106.70. It's reversal. So it means that here, if you're bullish and you are ready to just take this risk that I'm just have described, you theoretically could consider taking the long position, because here your stop will be very close to the grabbers. Grabber stands right there, just below this area, right? So your risk will be very small, but in case of some decision that will be a bit surprising for the market and EUR starts rising, you will get a very good entry point, although risk very high that you will lose the money. The same story for the bears. So here we have great downside performance, reversal swing, and I would say that's on the fall time from chart great engulfing, and by the rules of the technical analysis you could wait for some bounce to consider taking the short position. But once again it will be some kind of the anticipation, because these lows are still valid and grabbers are still valid, and you also will take some risk. So that's why, as I said, it depends on you're ready to take this risk or not. Personally, I would prefer to wait when this situation around the lows will be resolved, because currently background stands in favor of downward continuation. So if it will really happen, and tomorrow in the morning we will see the price stand below the lows of the grabbers, and dollar index once again shows the action above the grabbers and stand somewhere near the top, everything will become clear. We just consider taking the short position, that's all. And because if this will happen, the potential perspective here on the downside breakout will be more or less significant, so market will definitely keep going, and potential will be not small, but in this case all risk will be taken out. That's for me, well, looks better scenario. Just but as you understand, this depends on your personality, so it's a bit personal. And actually here I just have shown you all the actual pitfalls and possible problems and tricks that stands right now around current decision making on euro currency. So whatever direction you will choose, just I have to share with you the potential problems that might be, and actually advantages that any decision also has. So that's our 2 cents on the euro. Let's see what will happen, because we're coming in a culmination of this week. So Fed, Friday's payrolls, Yellen, and so on.